Hey guys, good morning. It's Tony. Currently working out, so that's why I'm a little out of breath. I did want to show a little bit to you guys, a little bit further breakdown, because I still feel like some people are confused and they're asking me questions. I'm going to use torch, for example. Relative high, it's the relative peak that's closest to current price. But if we look at the monthly, the actual previous high is somewhere back here at $6.79, right? But the relative high would have been somewhere at this peak right here, around $3 and something, which is that relative high from before, which is this relative high of $4.81 back from, February 16th, right? So in the case like this, we would, let me make this chart a little bit tinier just so everybody can see. And this is on the weekly, right? This is on the weekly chart. Again, we would get our fibs. We would place it on the relative high point, scroll to the right, go down, and mark it on the relative low from back here. I'm using these candles right here. When we would basically place it off of like the wicks. We wouldn't do off of candle open or close. This is going to be off the wicks, right? So immediately, what can we see, right? For the monthly, generally it's been trading sideways. It's generally pretty bullish, been bullish. The weekly has been bullish since April 26th, so this would have been an easy entry for torch. And what happened when it broke highs of $4.93, which was that last peak, right? It created this huge blue candle, right? What happened? It crossed that previous all-time high, created that candle, came back, retested that fib, a previous high, 490. So it used that resistance of the previous all-time high, retested the following week, and then it just completely shot out from there, right? And in the case like this would have been a perfect entry. So in a case like this, I would have probably, as soon as this shot up like this and closed, immediately that following week, I would have placed a buy entry or like a buy limit back here at $4.90. And then more than likely, I would have probably had another buy-in somewhere between $6.50 and that peak, right? But again, setting a buy limit here would have been absolutely perfect. What happened? Completely shot up. It hit up that 1.618 fib exactly to the T. And what did I always tell you guys? Always use that 5% up or down, or better yet, 2.5% down from that fib level and 2.5% up. So somewhere around this range, this is basically where you guys can take or start taking your profit, right? Somewhere around this range. Let me see if I can even that out somewhere. But again, once immediately after this broke trend, what's your job to do, right? You're setting your take profits. You would set the first there, you would set your second right on the fib level, and you would set your third, the most riskiest one, right at that 841 level. So immediately, you guys would have, let's say you bought 10 calls here at $4.90 when it retested, right? When it retested that previous high. Immediately from 490 to 7 something, that would have been an easy 50% gain up, whether you have stocks or if you would have had calls, that's anywhere between 100 and a 500% gain, right? And this is strictly using that breakout strategy that I've been teaching you guys for this last week or so, just putting up these videos and stuff. But again, if you have 10 calls, you would have sold 5 here at that first level. You would have sold like another 3 once it hit that fib. And then if it's your choice, if you want to let the rest of them ride for a little bit longer, and those you would have been completely out at $8.80 and like 40 cents, right? 41 cents, whatever. You know, your job is not to, you know, sell up here at $10.70, right? Like, no one's gonna be able to actually predict that top. Extremely difficult to predict the top, right? Unless you're actually seeing on the momentum side what's going on. I mean, if you go down to the day chart, you guys can see that there's gaps, whatever, but again, strictly on just breakout stocks, this is a perfect example of how you could have played the breakout strategy on Torch these last like 2 weeks, and this would have been your play for the month. You could have easily seen like 500% gain on like one ticker. This would have been your play of the month. You put in $1,000 to this, you sell out everything like at here, basically you just made like an extra like $5,000 in the month. So that's kind of how it works. Generally I like to do calls over shares just because I don't want to be left back holding up here, and calls basically kind of prevents you that. So yeah, you risk a portion of your money, but the chances of these things actually hitting are, you know, statistically it's definitely in your favor as opposed to not being, right? Because Torch, unless you like a company, then I would recommend to buy shares and sell or hold, whatever. So calls if you get stuck up here. But this is why I would only play options on breakout stocks, because the premium rise from here to here would be like 100 to like 500%, as opposed to shares between here to here about 50%, which is still an amazing gain within a week, right? Like that gain is astronomical. So but again, if this decides to dump like in the next week or so, at least you're not holding bags, right? And if you're holding calls, you've already sold out fully out of your whole position, and you don't have to worry about this anymore. You're basically done for like the month. I'll see you guys later.